In the early 2010s, financial technology was undergoing a quiet revolution. Wall Street had always been dominated by human intuition, gut instincts, and experience, but a new generation of trading algorithms was beginning to change the rules. Among these developments was an AI-driven trading bot, developed by a small startup whose goal was audacious: to outperform the best human traders on the planet using only data, patterns, and machine learning. The founders promised a future where markets could be predicted not by speculation, but by cold, calculated algorithms that never slept, never panicked, and never made emotional mistakes. Their vision was so compelling that a few early investors, intrigued by the potential of artificial intelligence and the promise of enormous returns, began funneling capital into the project, setting the stage for a story that would captivate the financial world. The AI, internally codenamed Argos, was designed to process massive amounts of financial data, news feeds, market sentiment, and historical trends in real time. Unlike conventional trading software, Argos was capable of learning from its successes and failures, continually adjusting strategies to maximize profit while minimizing risk. Early tests in simulation suggested staggering returns. It predicted minor market fluctuations, anticipated competitor trades, and optimized timing with unprecedented precision. The team behind Argos, a mix of computer scientists, data engineers, and former traders, cultivated a culture of secrecy. They would only allow a handful of insiders to understand the AI's underlying architecture, citing intellectual property concerns and the competitive advantage it represented. Rumors of its capabilities began circulating quietly among financiers and journalists, building a sense of anticipation and curiosity around the mysterious trading bot. By 2012, Argos was deployed with real money in small hedge funds, and the results were remarkable. Early adopters reported profits that dwarfed what experienced traders could achieve. Word spread quickly, though carefully controlled. The AI seemed almost uncanny in its predictions, winning trades that others thought impossible. Investors began to increase funding, and soon Argos controlled millions of dollars in automated trades. Its success brought prestige, attracting interest from other hedge funds, private investors, and even financial regulators who were both fascinated and wary. The suspense grew as Wall Street insiders whispered about the ghost trader that never slept and never made mistakes. As Argos' influence expanded, so did its complexity. The AI started identifying patterns that were invisible to humans: cross-market correlations, subtle algorithmic arbitrage opportunities, and temporal fluctuations in global markets that even seasoned traders could not detect. The team continuously refined its neural networks and machine learning protocols, feeding Argos more data than ever before. Simultaneously, the company restricted access to outsiders, creating an air of mystery. The secrecy, combined with enormous reported gains, created hype that bordered on legend. Investors were dazzled, some describing it as if Argos had a mind of its own. For a while, the bot seemed unstoppable, an almost magical fusion of technology and finance. By 2014, larger hedge funds and institutional investors had taken notice. They wanted access to the AI's capabilities, but the creators remained selective, granting only limited partnerships to preserve control and secrecy. The team emphasized that the AI was still experimental, but the profits were undeniable. Stories began to appear in trade publications about the AI that consistently outperformed markets, sparking intrigue and envy among competitors. Conferences in finance and technology featured panels discussing algorithmic trading, and Argos was often referenced as a groundbreaking example. Yet despite the growing public awareness, no one outside the inner circle knew the full extent of its methodology or how it truly operated. Suspense built as questions mounted. Could this AI really continue to outperform the market indefinitely, or was it only a matter of time before the system failed? Internally, the pressure began to mount. The AI, while extraordinarily successful, was not perfect. Occasionally, trades that should have succeeded failed in ways that confounded the team. These anomalies were rare but significant, prompting intense analysis and hours of debugging. The team had to constantly refine parameters, tweak algorithms, and adjust strategies. Employees worked long nights monitoring the AI's behavior, ensuring that nothing would go wrong on a scale that could lead to massive losses. Despite the tension, no one dared speak publicly about the AI's occasional missteps, maintaining the illusion of perfection. The suspense heightened as insiders realized that even the most sophisticated systems could be fragile when faced with unpredictable market forces. In 2015, the AI made headlines. A particularly complex set of trades resulted in record profits, reinforcing the mythology of the unstoppable machine. Articles in financial magazines described Argos as a trader that never sleeps and the mind behind millions. Videos of the team explaining the AI at tech conferences went viral in industry circles, further increasing its allure. Investors were clamoring to get involved, pushing valuations higher. Yet behind the scenes, engineers were quietly noticing subtle shifts in market behavior that Argos had not predicted. The AI's machine learning models, brilliant as they were beginning to face scenarios beyond its training data. The tension in the story was building. Could a system that had fooled even the smartest traders ultimately be undone by the very market it was designed to master? By 2016, the first major crack appeared. A sudden, unexpected market swing caused Argos to make a series of trades that led to significant, though temporary, losses. Internally, panic set in. The team worked around the clock to analyze why the AI had failed to anticipate the event. Investors noticed unusual volatility in their portfolios, sparking questions that had previously been rare. The narrative of infallibility was challenged, and whispers began to circulate. What if the AI was not as perfect as promised? The suspense intensified as the creators scrambled to maintain confidence, releasing statements to reassure stakeholders while privately working to correct the models. For the first time, the public began to wonder whether the machine that had seemed unstoppable might have vulnerabilities. Over the next 2 years, Argos continued to perform well but showed signs of inconsistency. While still outperforming most human traders, the occasional miscalculation raised alarms internally. Analysts debated whether the AI's algorithms were reaching their natural limits or if market conditions were simply becoming too complex. Investors demanded explanations, and pressure on the team increased dramatically. Engineers spent nights combing through terabytes of data, adjusting weights, and retraining neural networks. The story was now as much about human effort and ingenuity as the AI itself. Suspense was heightened because the world still saw Argos as flawless, while the inner circle understood the stakes. A single major error could wipe out billions and shatter reputations overnight. In 2019, a dramatic event finally brought Argos into the mainstream financial spotlight. A sudden and highly unusual market correction triggered a series of automated trades that went against the intended strategy. Losses were substantial, though the AI recovered some positions through rapid recalibration. The news spread like wildfire among traders and on social media. Analysts who had previously only whispered about the AI now openly debated whether any machine could truly replace human judgment in complex markets. The story captivated both the financial industry and the public imagination. For years, the AI had seemed unstoppable, but now the illusion of infallibility was being questioned. Suspense reached its peak as the financial world watched every subsequent trade closely. By 2020, regulatory scrutiny increased. Governments and financial authorities began investigating algorithmic trading systems, including Argos, to ensure compliance and transparency. The startup faced intense pressure to prove that its systems were reliable and safe. Engineers implemented additional safeguards, audit trails, and reporting mechanisms, but the mystique surrounding the AI began to fade. Investors were cautious, analysts debated the sustainability of algorithmic dominance, and the narrative shifted from unbridled success to a more complex tale of human oversight and technological limitation. The suspense now carried a moral weight. What happens when trust in AI intersects with high-stakes financial systems? The RE's story ultimately became a cautionary tale. While Argos had delivered remarkable profits and revolutionized trading strategies, its journey highlighted the limitations of relying solely on artificial intelligence in unpredictable markets. The company behind it was lauded for ingenuity but also scrutinized for opacity and secrecy. Lessons emerged about risk management, human oversight, and the ethics of deploying autonomous systems with access to billions of dollars. Investors, engineers, and regulators alike recognized that while AI could amplify human capability, it could never fully replace judgment or accountability. The suspense, drama, and thrill of its rise, combined with the eventual humbling of even the most sophisticated system, created a narrative that captivated Wall Street and technology enthusiasts worldwide. By the end of the decade, Argos had matured into a more controlled and transparent system. While still powerful, its success was tempered by rigorous oversight, continual monitoring, and a recognition that markets could be unpredictable. The RE story remained legendary, a symbol of both the potential and the danger of technology-driven finance. It had fooled even the most sophisticated traders, generated unprecedented profits, and created suspense that gripped the financial world for nearly a decade. The ultimate lesson: in the world of high-stakes finance, brilliance and innovation can achieve extraordinary results. But nothing, not even artificial intelligence, is completely immune to the complexities of human systems, market volatility, and the unexpected twists of fate.